Welcome to the Swing Trading with Cycles channel. It's January 6, 2023. We're going to do an update on platinum today. We are going to talk about where we are in the longer term cycle, but also this intermediate cycle that we're in. Where might we top out? Because we are going to get a pullback. There always are pullbacks. Nothing goes up in a straight line. So we're going to talk about all of that. If you're new to this channel, this is a channel where we focus on price action in order to understand what direction price is moving in terms of its trend. That's all price can do. It either trends up, or it trends down, or it consolidates sideways. Those are the only three things it can do, or you can think of it as two things: trend or consolidate. We can use price action to understand what direction we're moving in, and then estimate what the upside is based on previous price action, for instance. So going to the daily chart, thinking about the daily cycle, you can always look at the for a pinned comment. It'll have all your background information on cycles analysis, also swing highs, swing lows. So this was our last major swing low. That was on September 1st, and this thing tends to have really long daily cycles, right? Just meaning it either has a really long rally or a really long decline, or some combination of the two. In this case, this rally went for 51 days. And notice you had this huge drawdown in the process, right? And I'll just draw these out just so you can see. Those are just higher lows, excuse me. And that's the thing about a trend, right? In an uptrend, price makes higher highs and higher lows. So these higher lows, as long as they are higher lows, each low is higher than the last, it tells you we're still in an uptrend, even after this nasty thing. Now, to be fair, this broke this trend, this swing low here. So that was definitely this was definitely dangerous, and it was scary in real time. Looked like this thing was rolling over, and that's why you have to be nimble when you're looking at price action. And it's why we use multiple time frame analysis. So taking us to this daily cycle, it had a top on day 51. That was on November 11th. And then notice we came down, we made a low, and then we came up and made this like double top bearish thing that was really a lower high. Like you could draw, if you were inclined to do so, you could kind of draw your little trend line like that, right? And so we did that, and we kind of just meandered here, chopped around sideways, and then we made a slightly lower low on day 80, which was December 22nd, so below this low. And so this marks our daily cycle low, just as this was a daily cycle low. And obviously, this low is much higher than this low, which is incredibly bullish, right? And because you see, we're coming off of a downtrend, right? Where the daily cycles were making lower lows and lower highs. And so that's really exciting. And we'll look at the higher time frames are even more exciting. So we have this daily cycle low on day 80, a really long daily cycle. This thing has had long daily cycles in the past, as I talked about in previous videos. And so that puts us on day 9 today, Friday, January 6th, as we close out the week. We do have a high on day 7 so far. So that's at 1107, spot 164. And today was also, just note, very important to understand these price action trends. Today was a bullish outside daily candle, right? Notice we went below yesterday's low. So we started as a red day, not looking great. And then we reversed, went green, and we made a higher high. That's generally a pretty bullish signal that suggests further upside ahead, and we're only on day 9. Think about that. This last daily cycle rallied for 51 days. Now, again, notice we had this really nasty spill in between. What percentage decline is that? Just like really quickly. Like that's a 10% decline. That's a 7% decline. That's a 6% decline. So, and that's before this really choppy phase that like marked the top for the daily cycle. So we have to be prepared for these kinds of declines. Doesn't mean they're going to be the same percentages. That's just to give just a sort of estimate, just kind of help to quantify it. But we're early is the point, and we wouldn't expect the top until later. And that's where, especially the multiple time frame analysis comes in. If you look at the weekly cycle, this week just ended was week 18, right? See this week here. And so the expectation is we get a few more weeks up. That would complete the daily cycle rally. And then we have our daily cycle high, which is going to also be our weekly cycle high. So the expectation right now is that we could, if we get a bullish cycle, we could get that top on like week 22, right? And that would be pretty bullish. That would mirror this cycle here, for instance, right? because really you've had relatively short weekly cycle rallies, but you have a great analog in these two rallies. So this rally lasted 22 weeks, and then the decline was only 6 weeks. That's what the 28 means, right? The cycle was 28 weeks, 22-week rally, 6-week decline, and then it was followed up by another 22-week rally, and then a really shallow decline. Although I suppose you could quibble and say this isn't your daily cycle, this isn't your weekly cycle low, and it's actually down here, right? Like this was your initial decline, this is your lower high, and it doesn't really matter, right? It doesn't change the fact that it was a 22-week rally. That's why that's a really simplified, actionable way to think about cycles. Think about them as a way to just quantify how long a rally lasts and how long a decline lasts. You want to be in things that are rallying for a long time. You want to avoid things that are declining for a long time. It really is that simple. You can kind of think about it, right? And so we've come into this period where we've had these much shorter weekly cycle rallies. Like, this is like, right. And the fact that we're already on week 18 is very promising. That's already pretty extended. And we're making a new high. And so would not be surprised to see us go all the way to week 22, something like this. And it doesn't have to be 22 on the dot. Maybe it actually ends up being 21. And that is actually the week of the Fed meeting. So the Fed meets on February 1st. Someone pointed that out on Twitter. So that would actually make a lot of sense to get like some kind of reversal then and a move down, which may be a broader signal for metals in general, right? So that's going to be a really interesting scenario. And notice we then, and this is all just a guesstimate, a scenario. Maybe we have something like a 6-week decline into a week 28 low. So you got to prepare yourself for that. Like no matter what happens, no matter how bullish something is, there will be declines. You have to prepare yourself for those declines. Doesn't mean you have to sell in front of them. Doesn't mean you have to try to sell every top. Just be aware that the declines are happening so that you don't get caught, like so that you don't sort of panic, right? And if we look at the monthly chart, my God, look at this thing. And I've talked about this all over Twitter. If you're not following on Twitter, definitely take a look for a link in the description. September, this is the September candle right here, was a special month for metals and really precious metals. You could quibble if platinum is included in that, but gold made a low on September. Silver made a low in September. The gold to silver ratio made a high in September. That's bullish. The silver to gold ratio made a low. The GDX to gold ratio made a low that month. And I'll talk about this in my next precious metals video, but the miners to SPX ratio actually made a low. Let's just look at that really quickly. I'll do a whole video where we talk about this in more detail. But you can see that's September, right? Like that. This is the gold bugs index, so it goes back all to like 1996, the data, and divided by the S&P, so a ratio chart, and you can see it bottomed in September as well. So there's something about like September may have been a big turnaround month for metals. Now, here's the catch. You always want to make sure that you're thinking about the bullish case and the bearish case. Look at this. So just to be like crystal clear, the foundation of the market is swing lows and swing highs. And this is an important swing low here, right? Just as this was an important swing high. But we have to acknowledge this was also a swing low, right? And notice we're here on month 4 of a new weekly cycle. Or excuse me, this would be, you can think of this as a longer term cycle. In this case, if this is like a 3-year cycle because, this whole thing was about 30 months. So close to 3 years, 3 years being 36 months. Obviously there's a lot of variability on either side of that. And so this would be month 1, month 2, month 3, and this is month 4, January 2023. And so we're relatively early in a new long-term cycle. This last long-term cycle was really bearish. It had an 11-month rally and a 19-month decline, right? So it lasted 30 months, as we said. It rallied for 11 months and then it declined for 30 months. And then it declined for 19 months, so a total of 30 months. And so even if we got a bearish cycle, that suggests we could get a rally that lasts for 10 months, maybe even 11 months, maybe 8 months. Either way, month 4 is relatively early, even in a bearish cycle. These are other bearish cycles, like this one topped out on month 7. This was a really grindy, this was a 7-month rally, but we didn't really make a whole lot of progress in terms of price. Like you can see, generally your rallies, you generally aren't gonna top out on month 4. So that's really exciting, and that means, again, as we get those pullbacks within the weekly cycle, where price may decline for 3, 4, 6, maybe even 8 weeks, as long as we're not breaking important levels, and in this case, the really important level that you want to watch is the level that sets this swing low on the monthly, and that is 943. We really want to stay above 943. That's this line here. I'll get rid of some of these lines because that is getting a little confusing. Just so it's super clear. It's this line here. And I should change that to make sure it's the right coordinates. 943. So that is the monthly chart. And also you'll want to make sure that you can zoom out even past the monthly chart. Let's take off the drawings. The first thing we'll look at is a quarterly chart. Look at that thing. We are making new highs. So first off, this is a swing low. This is the Q3 candle for 2022. This is the Q4 candle from 2022. And this is the Q1 candle that just started, right? We're trading in January 2023. So notice we have a quarterly swing low above 973.52. So as long as we're above 973.52, we are beginning an uptrend on the quarterly chart. That's incredibly important to note, to like be aware of that level. It's possible that we wash below that level, like let's say in the weekly cycle decline. You'll want to watch for a recapture of that level, right? Like let's say we wash below that level, we get to like 950, 920. On a recapture of this level, 973, that puts the quarterly uptrend back in play. You want to make sure that you're aware of that. And we'll obviously be talking about that on this channel. And so you can see this is just kind of a rolled up view of the last rallies, right? So you had a rally for 4 quarters. You can see this rally for many quarters. You can see obviously you can get like a really big decline in this kind of thing. This was with the global financial crisis. So for right now, it's making higher highs. I always talk about this. Look at your candles on higher time frames. Are they green or red? That's important. In this case, they're green. That's obvious. That's great. That's awesome. Is it making higher highs or making lower lows? Well, we made a higher high last quarter above this high. And are we making a higher high now? Yes. Obviously, a long way to go for this quarterly candle to close. So it's going to transform and morph in the process. But this is an auspicious start, isn't it? And the last thing we'll look at is the annual chart. So every candle here is an entire year of price action. And you can see this is your 2020 COVID candle. Big lower wick. As I always say, a lower wick is a rally on a lower time frame. That's how it works. An upper wick is a pullback on a lower time frame. So you had this big rally in 2021 off the low, like everything rallied in 2020. And then 2021, you actually had this big pullback. And also important to know that this candle was green at one point. This was a new, like in the same way that quarterly candle is making a new high right now. This candle, the 2021 candle, at one point was making a higher high above the 2020 candle, and then it failed and it went red, but it stopped, right? Like the decline stopped here. We built this little lower wick, and then 2022 off to the races. And I talked about this in the last video, but just as a reminder, we are threatening to build a compound outside candle. So making a high above this candle, above this candle here, the 2021 candle, that high at 1341. That's what would happen if we get a bullish move. That's the big picture pattern that's playing out. And when we get up there, it'll be important to see, is that a false breakout? Are we going to see downside from there? But that is that's a great thing to look forward to, especially as we sit here at 1100. So that's platinum. That's a pretty detailed overview. I'll quickly look at PPLT because that is a practical way for folks to play platinum versus trying to find the 1 or 2 platinum miners that exist. And so it's the same thing for platinum, same patterns, right? It's also day 9, or for PPLT, this is a platinum, physical platinum ETF. And notice it's actually making a higher high today, whereas the platinum itself is not making a higher high. That tells me people are kind of piling into this thing, right? This is almost more bullish than platinum itself because, again, this is retail's way of kind of getting into this. So the same numbers, the same like cycle counts apply. You can see it's all the same patterns, again, with some differences. So this is almost like front running platinum, you could say. And the level that you want to really be aware of on this one is like coming back to retest that essentially 110 level. And we closed here around 101. And so this has been a good risk reward trade really all the way since we had this swing low here and kind of broke out of that range. And so you could easily see a world where you put your stop below here, right? And that same pattern that we talked about on the weekly for the weekly cycle would play out for PPLT as well, right? Where, we would go on, in this case, the expectation would be we would test that 110 level and then maybe try to flirt with like 113, something in that kind of neighborhood. But again, there will be a decline. You should prepare yourself for that. And again, all the same patterns apply on the monthly. I mean, look how bullish this thing is. That's awesome. All-time high for this is 122.48. But again, as people try to squeeze into platinum, you could see a world where this thing like really not all-time high. The local high from February 2021 is 122. The all-time high is 189. And obviously, again, if we get a really bullish move for this, you could see us exceeding that. So there's definitely some decent upside near term, something like 9%. But, by the end of the year, wouldn't be crazy to see us, like, let me just zoom in on this. This is your monthly chart. It wouldn't be crazy to see us trying to test the underside of this whole consolidation range, right? Like even up, so anywhere from like 127 to like 137, which is obviously a pretty wide range. And then up there, right, like look at that. You go from like the 130s to like the 160s pretty quickly. So there's a thin air zone, which is going to be interesting to see if and when we get up there, to be aware of. Again, patience. Don't be scared out by the weekly cycle declines. Anticipate them. Be ready for them. Embrace them. Use that as your opportunity to add with your dry powder. So that's our update on platinum. We'll leave it at that. Thank you for watching and have a great weekend.